Gurubhyo Namaha. Om Shri Ganeshaya Namaha. This is part 08 of presentation by myself, Brahmadeshan Narsimhayer Venkataraman on INFLAPRO and systematic withdrawal plan. This video is a break from the regular one. Due to a friend's request similar to that of engineer T. Rajendran, referred to in my previous video, part 07, I take up some clarification to some important terminology used in my INFLAPRO till now. Inflation. Everyone is aware of the fact that current year cost is not the same as previous years. Every year there is some increase in cost. From these cost escalations, we derived inflation percentage. Inflation percent can be calculated with a formula: current year cost divided by base year cost raised to the power of 1 by number of years minus 1 whole into 100. As per the government figures released by Income Tax Department, we have cost inflation index up to year 2021-22 starting from the base year 2001-2. Also, we have the old inflation index from 1981-82 as base year up to 2016-17. I have compiled a combined inflation index from these two figures and corresponding cumulative compound inflation in respective years from 1981-82. Year over year inflation percent also available. I have reproduced the table in my PDF link, which is given in the description box below the YouTube. Old cost inflation index, new cost inflation index, and combined cost inflation index, and also giving year to year. According to this data, the inflation percentage year over year before 2014-15, in some years it was more than 10%. In later years, the year over year figure is less than 6%. However, the longest cumulative compound inflation is 6.72% as of 2021-22. The principal is also called a purchase price or capital or investment or cost of investment by LIC, SBI, mutual funds, share market, etc. Face value is generally taken as 10 in mutual fund. In shares, face value can be rupee 1, 2, 5 or 10. Rate of return. It is the percentage applied on face value of the principal. Internal rate of return or simply interest. Represented as percentage, it is the rate at which interest is calculated on run balance. The internal rate of return in the case of pension is generally 4% to 6% at present, and maximum in LIC pension, which is higher compared to SBI, ICI, HDFC Life Insurance, etc., is 6.13% in Jeevan Akshay 7, the latest scheme on the following parameters: entry age 60, life expectancy 100 years, in case of annuity or joint life either 100% or 50% annuity to spouse. Further period is considered over this 100 years for a period of 15 years, making the total term to be 100 minus 60 plus 15 is equal to 55 years. no return of purchase price. In all other cases, with life expectancy less than 100 years, the internal rate of return is much less than the above 6.13% and is in the order of 4% to 5.5% only. The IRR was around 8% on policies of the year 2014 and before. There is one scheme in this sort of regular income, that is Pradhan Mantri Vaya Vandana Yojana, available at LIC and post offices, which gives an internal rate of return of 7.4% monthly compounded. PMBVY is better for senior citizens. Limit of investment in this scheme is rupees 15 lakhs. Here the lock-in period is 10 years. The scheme returns the purchase price on maturity. Also, for senior citizens, there is another one, namely Senior Citizen Savings Scheme, which can give a internal rate of return of 7.4% quarterly compounded. Here the lock-in period is 5 years only. The investment limit is rupees 15 lakhs. Purchase price is returned at the end of the term. The quarterly internal rate of return of Pradhan Mantri Vaya Vandana Yojana is 7.446%. Yet, Senior Citizen Savings Scheme is certainly a better option than BMVY in many respects. Senior citizens looking for regular secured income can consider Pradhan Mantri Vaya Vandana Yojana or Senior Citizen Savings Scheme as a small part of their portfolio. All other pension schemes other than these two are underperforming than the inflation and hence are not worth investing. We will see about fixed deposit mutual funds after completion of INFLAPRO pension schemes. This sort of financial literacy, starting from power of compound interest, should be made available too in the high school curriculum itself. Now the question arises that if these pension schemes are unworthy investment, why should we discuss these schemes with suggestion of INFLAPRO? The answer is INFLAPRO is applicable to any deflation inflation percentages, preferably from -10% to +10%, and I am starting with examples of pension being the easiest one. In fact, what we are discussing now is actually the reverse calculation to find internal rate of return. That is the interest burden of to the financing company from the return figures. We will be seeing the forward calculation soon by specifying custom interest rate, that is internal rate of return. Let us continue in next session. The description box below contains also the link for PDF format of these pages so that one can watch the figures leisurely and with more clarity. Thanks for watching. Request those not yet subscribed to please subscribe, comment and share. Thank you.